What would you do with $500? Blow it on a shopping spree? Let it sit in a savings account earning basically nothing? I decided to put mine to work. Today, I'm breaking down exactly how I invested my first $500, the strategy behind it, and what happened next. Stick around, because I'll also share the mistakes I made, so you don't have to repeat them. My starting point. Let me set the scene. I had $500 saved up. Not life-changing money, but enough to make me ask, can I actually invest this? I'd always heard things like, you need thousands to start investing, or investing is only for rich people. Spoiler alert, that's completely wrong. Still, I was nervous. This was money I worked hard for, and the idea of losing it honestly stressed me out. So I did what most beginners do. I spent about 2 weeks researching, watching videos, and reading beginner investing guides. And here's what I learned. You don't need to be an expert. You don't need a lot of money. You just need to start smart. My investment strategy. After all that research, I created a simple plan. I split my $500 into 3 buckets. Bucket 1, index funds, $250. That's 50% of my money. I invested in a low-cost S&P 500 index fund. This gave me exposure to 500 of the largest companies in America, like Apple, Microsoft, and Amazon. I wasn't trying to get rich overnight. I wanted steady, long-term growth. Bucket 2, individual stocks, $150. That's 30%. Here, I picked 3 or 4 companies I actually understood, businesses I use and believe in. This was my learning bucket. A little more risk, but great real-world experience. Bucket 3, emergency reserve, $100. That's 20%. I kept this money liquid in a high-yield savings account. Why? Because life happens, and I didn't want to sell investments at the worst possible time. How I actually invested. Now, the practical part. I used a beginner-friendly investing app with 0 commission fees, because when you're starting small, every dollar matters. Here's exactly what I did. I opened the account, took about 10 minutes. I linked my bank and transferred the $500. I bought fractional shares of an S&P 500 ETF. Then I invested in individual stocks like Microsoft, Coca-Cola, and a tech company I believed in. Finally, I set up automatic monthly investments of $50. Once I knew my plan, the whole setup took less than an hour. The mistakes I made. And yes, I made mistakes. Mistake number 1. I checked my portfolio every single day. This was stressful and pointless. Markets go up and down constantly, and it almost made me panic sell. Now, I check maybe once a week. Mistake number 2. I tried to time the market. I waited for the perfect dip. It never came, and prices went up instead. Lesson learned. Time in the market beats timing the market. Mistake number 3. I didn't have clear goals. Once I decided this was for long-term wealth building, everything became simpler and calmer. Results and lessons learned. So what happened to my $500? After some time, my portfolio grew steadily. Some months were up, some were down, but overall, I stayed positive and kept investing. More important than the money, I gained confidence. I now understand diversification, compound growth, and dollar cost averaging. And that knowledge is priceless. Here are the biggest lessons I learned. Start small, but start now. Diversification reduces risk. Emotions are your biggest enemy. Consistency beats perfection. And only invest in what you understand. Advice for beginners. If you're sitting on $500, or $200 or even just $50. Here's my advice. Learn the basics first. Start with index funds. Think long-term. Don't invest money you can't afford to lose. And build an emergency fund before going all in. Most importantly, just start. The best time to invest was 10 years ago. The second best time is today. If this helped you, like and subscribe for more real investing content. And comment below, what would you do with $500? See you in the next one.